Good afternoon, ladies and gentlemen. This is Rakesh Sharma here. Thank you very much for joining the call. And now, as we have moved from Q4 into the new financial year, the pandemic too has undergone a dramatic change. Many of our near and dear ones have been afflicted, and I wish them a swift recovery, and I hope everyone keeps safe. Now, we have our fourth quarter and fiscal 21 financial results today. I hope you have had the opportunity to have a look. But I'm pleased to inform you that our board of directors has recommended a dividend of rupees 140 per share, which translates into a dividend yield of 3.6% and a payout ratio of 90%, which, if you will recall, is in line with the dividend distribution policy that we had announced just last month. I will divide my opening comment into two parts. First, some highlights of our Q4 performance beyond what has been released. And since we have had regular interactions, I'm refraining from going into a commentary of the full year, preferring to remain with the recent most events. And the second thing I'll close with is near-term outlook. Before I call out the highlights, it is useful to revisit the two-pronged approach the company has been executing since the beginning of FY21, which was number one, to capture the recovery in demand, particularly in overseas markets, where it was expected to be quicker, through strong supply chain management and very focused engagement with the market. Second, to continue to drive premiumization within the segments and across the segments to ensure that in an uncertain demand environment, we are more than protecting our financial performance. Coming to the first part, which is the highlights of Q4 business, let me make a few quick comments on our domestic motorcycles business first. The most noteworthy aspect of this BU's performance is our share of the 125cc plus segment. If I divide the demand pyramid of the country into two parts, the top half being 125cc plus portfolio, this contribution of this part in our total business continued to rise from 46% in FY20 to 60% in Q4. So now 60% of our motorcycle business volume come from 125cc plus bikes. Of course, this has been driven by the outstanding success of Pulsar 125, where in the space of 12 months, our market share has improved from 7% in FY20 to 19% in Q4. Indeed, we think we have strongly contributed to shifting the industry architecture itself, as the 125cc segment has expanded by 4 percentage points over the year for the whole industry. In the top half, another noteworthy progression, though small in terms of volume, but big implications from a future development point of view, is the performance of the Dominar 250. It has made a very confident start, and we are surely and steadily trying to build the quarter-liter class segment. In the bottom half of the demand pyramid, we continue to play out our strategy of introducing upgraded products and making better products more accessible to the customers there. And 3 upgraded variants of the Platina brand were launched with the electric start and with 110cc. So as you recall, we had said we want to convert people who are using kickstart to electric start, people who are using drum brakes to disc brakes, and people who are using 100cc bikes to 110cc bikes. This segment requires slow, short evolutionary steps rather than big leaps, and that is what we have been attempting. Of course, overall, the market share remains steady because of our seeding ground at the very entry level, but this was by design, as we want to drive up our market share by upgrading the customer within the segment and across the segment. Coming to the domestic commercial vehicles business, the three-wheeler business started to make a promising return towards normalcy every month, climbing by 1,000 units sale, and we could see that it was the traffic had gone back to almost 85% levels by middle of March. But of course, April again we have seen a halt on that. So it took a little bit longer, but it was heartening to see that the three-wheeler business had started to make a return. But even though the volumes are much lower in the quarter and across the year, there have been some very significant leadership changes. There are three segments in this market, the largest being the small passenger, which is the small auto rickshaw which is seen. The second one being the large passenger, which is generally used in smaller towns and suburban areas. And the third is the cargo segment. We have always enjoyed a very high level of market share in the small passenger segment, 85% levels, and that is more or less intact. But in the large three-wheeler segment, also now we have established a sizable leadership share of 48%. We believe this is 12 percentage points ahead of the next competitor in Q4. So we are now very, very clear leaders in the small passenger and the large passenger segment. In the cargo segment, we gained 6 percentage points of market share, and we are a very strong number 2 now with a 34% market share in striking distance of leadership. Why I'm making these points is that when the business returns, this improvement in competitive position is surely going to give us a lot of benefit. Coming to the exports business continues to perform robustly with a 200,000 volume performance every month. Q4 was our finest ever Q4 in our history, and it actually came on the back of a very high Q3, as you know. Within the Q4 in January, we had a highest ever sale month in January. As a result, we have been able to breach the 2 million vehicles export milestone despite COVID. Our market share in top markets inched up in motorcycles and moved up quite significantly in three-wheelers. In exports also, our share of premium motorcycles, which is the Pulsar and Dominar brand, has moved up from 13% in FY20 to over 16% in FY21, further strengthening the financial performance. We continue to get over 80% of our revenues from markets where we are number 1 or number 2. In fact, 77% of our revenues now come from markets where we are a clear number 1. This is an important metric which we have been monitoring continuously for the last 5 years or so, as it indicates pricing power and our ability to manage competitive threats and actually shape the market itself. Our exports to KTM have grown at a significant pace of 60% plus, powered by a surge in demand in the developed markets of North America, Europe and Australia. Some other highlights: we face strong headwinds of cost increases of up to 4%, of which we could recover only about 1.5%, keeping demand sensitivities in mind. Though I must add that we believe our price increases, both in India and particularly overseas, are mostly ahead of what competition has done. Supply chain demonstrated resilience in responding to various disruptions. Those shipping issues, which is the frequency of shipping availability, still causes an almost 10 to 15% spillover of the exports order book. Finance penetration, particularly from Bajaj Auto Finance, has improved in motorcycles and is a very supportive growth driver as well as an enabler in the three-wheeler space for us. And going forward, we will be leveraging this aspect even more. Now, coming to the second part, which is our immediate term outlook. As we all know, the surge in the pandemic has again drawn upon us the fog of uncertainty. The demand situation in domestic has become ambiguous, and it will run symptomatically with the progression of the pandemic. While certainly we are not facing the nil scenario of last time, but we must wait for some more time to understand the full impact of the current surge on the immediate retail environment of motorcycles and CVs in India. Having said this, the supply chain disruptions, the vendor side or at our plants, are much better manageable this year than the previous year. A better local level dialogue with the administration, learning from the past and better preparedness of the vendors and our own teams are helping us deal with this much more confidently, and we don't see this kind of interruptions in the supply chain impairing our ability to service the market. Additionally, going by the experience of the last time, we remain sort of optimistic that the demand should return swiftly as and when the pandemic is brought under control and the vaccination program advances confidently. We will monitor the situation very closely and respond to it. We think that the time might come around July, but again, these are a lot of it is based on assumptions on how the pandemic moves. But irrespective, we will continue now again with our approach of driving the premium end of our portfolio, which is the 125cc plus, and even within the bottom half of the pyramid, going continuously expanding to upgraded products. We have refreshed and launched a new color range of Pulsars in April. A new Pulsar 125 has been put out into the market as we speak. Upgraded versions of the CT 110 and Platina, a top-end Platina, are already being dispatched to the market, to the dealers in April. These, I believe, should hold us in good stead as demand recovers. We had planned these to actually be in position for the mini marriage season of the North, but that seems to be a little bit impaired now. But as and when demand recovers, we feel that this will really make a very strong proposition to the customers. Internationally, we will continue our momentum and expect to hold the current performance level steady. Though we have encountered some new COVID-related demand issues in Bangladesh, but hopefully we will be over them, and presuming we don't have any more black swan events or there is no major surges of the pandemic, we think FY22 will be our finest ever year for exports. On the cost front, there is an increase in raw materials. As you know, commodity materials in the coming quarter, we see about 3% and should be able to recover at least 2% through price increases, and that has already been done. We will continue to work on cost optimization measures and calibrate further price increases based on response of demand over the next few months and quarters. So in this regard, I hope the Government of India will make some announcements around RoDTEP and the outstanding NEIS SWIFT. This will significantly help Bajaj Auto because of the large share of exports in our business. Finally, as you may have gathered, we have reopened our bookings for the electric scooter Chetak, and we have received a resounding reception yet again. So we had to close bookings yet again within 48 hours because we got a tremendous amount of interest. Some of our international partners, vendor partners, have told us that they should be able to give us some very clear visibilities of availability of components by May and June, based on which we hope that we will be able to maximize the potential opportunity for Chetak and widen our footprint to many, many more cities in this financial year. With these comments, we can now open the floor to the queue to questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question, you may press star and 1. The first question is from the line of Hitesh Goyal from Kotak Securities. Please go ahead.
Yeah, thank you for taking my question. So my question is on this, the commodity cost pressures that you are seeing, right? I think you talked about a 1.5% price increase that you have taken in the domestic and export markets, whereas the commodity cost increase has been around 4%, right? If you include the third quarter and fourth quarter, and it's going to increase in first quarter. So can you comment on that? Plus also if you can comment on the Q-on-Q realization increase is 7%, how much is because of mix, how much price increase, and if you can give the export revenues for the quarter.
Okay. Shovan here, that's a lot. So, for cost, as we have mentioned, and as Rakesh mentioned, we have seen sequential cost increase of between 6 and 7% between Q4 and Q1. I'm trying to make it simpler. 3 followed by 3 or 4 followed by 3. The price increase that we have taken in Q4 blended was in the range of about 2%, and we've taken another about 1.5-2% in Q1. So that is the kind of price increase that we have taken blended between domestic exports and the like. So I hope that answers your first part of the question, which is your price increase and cost increase. As far as export revenue is concerned, this quarter we did a shade below 4,000 crores. So it was 3,991.
Great, sir. And if I can put in one more question. Can you get us some sense on the export volume outlook for next year? I mean, because you have pending orders as well. So how should we look at the export volume growth FY22 versus 21? Any guidance would be very helpful.
I think if you would have heard Rakesh mention, while he's speaking, he mentioned that we expect this year to be one of the best years, if not the best year of exports. So he had already mentioned it in his commentary.
Yeah, I mean, best years in the sense it will be, any guidance on the volume growth? I mean, in terms of absolute increase or, range if you can give so that we can, understand that.
You really believe that sitting in April, I can actually give you a range of volume increase that will happen in the next year? We are saying that it will most likely beat the highest ever that we have done. But beyond that, I don't think in the first month of the fiscal, I can really predict a number.
Okay, sir. Great. All the best, sir. Thank you.
Thank you. The next question is from the line of Raghunandan NL from Emkay Global. Please go ahead.
Thank you, sir, for the opportunity. Congratulations on good numbers. Sir, firstly, within models, there has been premiumization. The share of top-end vehicles has been increasing. What is your assessment on how the customers are looking at it? What is making the customers shift towards higher variants?
Okay. What is actually, if I could separate it out from economic context and first your understanding of that. Now, what has happened is putting the pieces together even from other categories is this last year has seen a considerable weakening of the bottom parts of the demand pyramid of consumer sentiment there, of purchasing power, etc. There is a certain dichotomy which is developing in the industry, not just for our category, for many categories, that we are seeing that the top half of the demand of the consumers, they actually have come out largely unscathed from the pandemic. The job losses have not occurred. there has been certain savings because the opportunity to spend was not there, and a little bit of feeling of well-being based on stock market and savings going up has caused actually people to feel much better, and that's also resulting in these partly the long waiting period for cars, etc. And we are seeing that impact in some of our bikes which are more than 2 lakhs, particularly the KTM varieties, where we are fighting to supply demand. So our strategy actually fell in place quite nicely because we started to focus on the 125cc plus segments, and particularly the 125cc segment, because we did feel that after ABS, the 150cc plus will become a bit more expensive, so there may be a little bit of a drop down, and we wanted to upgrade the better off consumer in the 110cc. Now, this strategic approach coincided very well, if I can say that, though it's a bit unfortunate that one part of the economy has taken a big knock, but we were there with the product. So if you see, the Pulsar 125 is the most expensive 125cc, but still it does outstandingly well. Its market share has gone from 7% to 19%, and it is, if you see the later months, and newer variants are being introduced, we expect this to definitely go into the 20s. So the customer has, in that segment, was not as badly impaired as the one just below that segment, and has given a big vote of confidence. So that is the most sort of significant explanation. Even on the bottom end of the pyramid, where it has been a little bit of a struggle because the bottom has really fallen off. The cheapest products, whether it is us or competition, are having a severe beating, are getting a severe beating in the last 6 months or so, and particularly now. And in that, our whole approach has been to give better products at similar or slightly higher price. Now, we could have taken the approach of giving the same product at a lower price and attract, but we've not got tempted by that direction. So we have introduced some better products, whether it is more comfortable, more safe, even for the 100cc buyer, and trying to attempt to upgrade them. Some of them may not want to go all the way to 125cc, but at least to 110cc, at least to a more comfortable bike, at least to a more safe bike, and start that journey. It's a more difficult play, but we are encouraged by the results, but we have to wait a little bit more to see how it actually plays out. So I would say that would be the sort of source of our, the progression in our portfolio.
Thanks, sir, for the detailed answer. And my second question was on ROTDEP. What kind of benefits are expected? How does it compare with MEIS scheme?
Well, this one is really, you have to ask the finance minister because we keep hearing news and anything I say would be speculation. What we are hearing directly and also through SIAM is that it is very much there, and its announcement is imminent, but whether it will be completely offsetting MEIS, which I personally don't think it would be, but to what extent it would offset is something which we have to wait for the announcement. But we have been hearing that it is imminent for a while now. But nobody in the ministries or anywhere, SIAM tells us, has said that this is not happening. The Pillai committee has submitted its recommendations. They are with the cabinet. As soon as it gets cleared, I think we'll hear about it.
Thank you, sir.
Thank you. A request to all the participants. Due to time constraint, please restrict to one question per participant. The next question is from the line of Binay Singh from Morgan Stanley. Please go ahead.
Hi team, thanks for the opportunity. My first question is that when we look at other expenses as a percentage of sales for Bajaj, in fact we even saw it for TVS, that the number has come off in the last 3-4 quarters. So because of COVID in FY21, were there some expenses for you which were lower than what normalized would have been, either on the sales promotion side or on the advertising side? And linked to that, do you expect them to sort of creep back in as the environment normalizes, or you think this is the new sort of normal for other expenses as a percentage of sales? Thanks.
So, yeah, thanks. Sorry. So yes, other expenses has kind of come down as percentage of sales for the full year, and which is essentially cost control measures. But at the same time, I must admit that Bajaj Auto finally is a very frugal organization. So there wasn't flat to be cut. So there are projects which have been deferred and all that. So in all probability, they will come back to the previous levels.
And anything on the sales promotion spending in particular, or the advertising spending? Because is that, like, when I look at the March quarter, is that now back to like normal levels? Because I understand in December quarter, that spending was quite lean for companies.
So there are two parts of that spend. One part which you don't get to see because it is netted off against top line, which is if you are giving a scheme for the customer. So it's a little lopsided, and frankly, you will not be able to make it out from the results, because as per accounting standard, if you are giving a scheme which is an offer to the customer, it has to be netted off from income. So that is why the yo-yoing happens. Coming to your question whether Q4 is the right base to take, I would say no, because Q3 would always be the highest, because not only do we have festive in India, but also some of our global markets we have festive because of Christmas and all that. So no, Q4 is not the base which will be there for the next 4 quarters.
So in summary, you mean that it will go up from Q4 levels? Because Q4 is higher than Q3.
On an average, it will go up, because as I mentioned, my highest is Q3. So yes, it will go up from the Q4 levels.
And just linked to that, do you expect the industry also to be a little more aggressive on the spending? As you know, after wave 1 also we saw two-wheeler was one category which did not really recover that sharply, unlike cars or so. So now with wave 2, do you foresee higher spending by the industry on these line items in the coming quarters?
This is in the realm of absolute speculation about what the industry will do. But I will try to answer this question since it has come up by logic. Various companies have got various kinds of cost increase numbers. But everybody is saying that they are not being able to recover everything. So in a scenario where the companies are not being able to recover their material cost increases, it will be very unlikely for anybody to go berserk on their promotion activity. But what will actually happen, frankly, sitting here, I am as wise as you are.
No, this is very helpful. Appreciate the response. Thanks so much.
Thank you.
Thank you. The next question is from the line of Jinesh Gandhi from Motilal Oswal Financial Service. Please go ahead.
Hi. This question pertains to margin trajectory. So we have seen benefit of our two-pronged strategy on product side. Excluding this impact of RM cost, how do you see margin trajectory playing out over medium term over next 2 to 3 years time?
See, the margin trajectory can only go up, and I will give you the reasons why. I think commercial vehicles will certainly recover from where it was in Q4. So that will be an upside to margin, because I make more margin in commercial vehicles than the blended amount. The other upside should be a depreciating rupee. We have already seen rupee depreciate a bit in Q1. The third upside, as was discussed in the previous question, the RODTEP will finally come. Now, whether it will recover all 2% of MEIS or it will do less, but there is something that will certainly come. So these are the reasons why we believe that margins will go up. The only headwind of margins is motorcycle as a part of the mix was lower this year. So if it was to recover back to growth of double digits, then to that extent mix can worsen. But if I keep commodity cost aside, because as you rightly mentioned, Jignesh, that this commodity cost is a story of 1 or 2 quarters. It is not as if that every quarter commodity cost is going to increase by 4-5%, then we might as well start a commodity company. That will plateau out over the medium term. But directionally, I should see benefits coming subject to competitive pressures.
Right. And what were spares revenues and USD INR for the quarter?
Yeah, the spares revenue for this quarter was about 1,089 crores, 1,089.
Right. And USD INR?
Pardon?
Currency realization, USD INR.
Oh, realization in USD INR? So this period in Q4 we earned about 72.9.
Okay.
Q4 blended average is 72.9.
Sure. Thanks, sir. I'll come back and have a question.
Thank you.
Thank you. The next question is from the line of Kapil Singh from Nomura. Please go ahead.
Yeah. Hi, sir. Just one follow-up on the spares. I see that run rate for last 2 quarters has been pretty strong. So could you give some color that, are we doing something different over there that's helping us grow much faster?
See, the pandemic does not impact the amount of spares that are required. And anyway, as you know, of the total possible sales of original spares, the actual sales of original spares is nowhere close to even 70-80%. So there is a lot of headroom. Plus, there was a backlog where we did not supply, but the industry, there was a depletion of stocks at the dealer-distributor level. So it's just a catch-up of that. As a matter of fact, if you look at the full year number, I have marginally declined. Last year I did about 3,100 crores. Just a little more than 3,100. This time I'm a little less than 3,100.
So directionally, should we work with the 1,000 crores kind of number, or you would have a sense of what kind of growth would be there?
No, I think whatever we have done this year, you can take that as the normalized rate and then divide by 4 and consider.
Okay, that's helpful.
Full year.
Yeah. And secondly, sir, could you also talk about KTM's performance, because we've seen pretty strong profit contribution there. So is it sustainable, and what's happening there?
KTM performance.
Yeah, the KTM exports to KTM markets has been doing very well, as I mentioned. It's now running at an 8,000 units per month level, up from some 3,700 of last year. And we are not being able to service the full demand because of the semiconductor shortage and the large usage of electronics in these bikes. I would say we are falling short by 10-15, at least by 15%, I would say. We expect this level of performance to continue.
Okay, so I was questioning regarding the profitability as well. So that should also continue around the same level?
No, you asked about KTM or profitability? Which one?
The profit contribution from associates, which is about 200 crores.
Contribution from associates, sorry. Yeah, mostly I would like to believe that this is the steady state profit that they are doing. If you look at the full year numbers, they have dropped in Q1, but they have recovered very well. So Q1 they have actually declared a loss, but for a full year they are almost back to what they did in FY20. They were some calendar year. So yeah, I would like to believe that this is reasonably steady state.
Okay. And so lastly, could you also comment on the EVs, because
People on the queue. Sorry, there are a lot of people on the queue. We can't take.
Sure. I'll come back in the queue. Okay.
Please. Thank you.
Thank you. A request to all the participants, please restrict to one question per participant. If time permits, please come back in the question queue for a follow-up question. The next question is from the line of Chirag Shah from Edelweiss. Please go ahead.
Hello, am I audible?
Yes, sir.
Hello. Yeah. My first question is for Mr. Rakesh. Sir, my question pertains to domestic motorcycle demand. If you look at last 4 years, the domestic industry, in a sense, has been in a declining mode. We did around 12 million, 12.6 in 18, which went to 13.5 in 19, and after that, we have been around 10.5, 11 million range. So, how should we look at this demand? Can we scale back to the F19 peak sooner, or that was a slight abnormality and the normalized growth over last so many years that we are seeing should be looked at the current base? How should one look at, because premiumization seems to be picking up, but the volumes are not really picking up the way the general expectation has been.
Well, I must say the audio was not fully clear, but as I understood, you're asking about how we should look at how demand for motorcycles unfolds in India when in the last 4 years it has been continuously declining track. I agree with you that the last 4 years have not been good for the industry because it has got hit by many things. If you recall, first there was the BS4 transition, and then there was the additional costs of insurance, and then the BS6 transition, and then of course COVID has caused disruption, which means that we have really back to 4 or 5 years ago as an industry. Fundamentally, the near-term outlook is not going to suddenly swing things dramatically. We would be happy if we are back at even FY20 levels. But if you dive a bit deeper, I think the fundamental drivers of demand are still very much present. Some of these hurdles and roadblocks, the industry needs a little bit of a smooth run, a little bit of breathing space, a little bit of stability without either regulatory, particularly, like ABS came and hit, CBS came and hit. Many things have been happening in the industry. So, because of the fundamental demand drivers, whether it is, the youthful population, whether it's the penetration of roads or Aadhaar card-led penetration of retail financing, now I would say certainly there is a need for independent mobility. All these things when you put together, we definitely think over a period of 3 years, demand should rise. But it will be a snake in the tunnel thing. It's not going to be a linear movement. As we have seen, the last 2-3 years have been very, very disruptive. And hopefully, some kind of environmental stability comes today. And that will allow the industry to breathe easier and achieve its potential, which I still think is not yet fulfilled.
Yeah, thank you very much. So just a follow-up on this. On the new product or major upgrade, assuming this COVID scenario normalizes sooner, can you share some light? How should we look at new launches or major upgrades, a major platform change over the next 18 months? And are there any white spaces that you are targeting in domestic market?
So, now we are thinking that this is not a one-off thing. The pandemic situation is maybe in a more muted form, but it's going to remain. This way of life is going to continue. And we are accelerating our product program so that it recovers some of the lost ground of last year. And we are going to continue with our strategy of putting out products irrespective. Yeah, there was a thought in our mind that, April and May is not proceeding as well. Should we put out some new products? But then it's very difficult to time this now because there's so much of uncertainty. So we are going to be churning out. We've got a full pipeline. I described to you that there are 3 introductions which we have made. A couple of them are absolutely new products like the CT110X and Pulsar NS125, which expands our 125 footprint. You will see in another, let's say, 6 months, and within 6 months, we will be putting out newer platforms and newer variants, not just variants, but a new platform. And this is going to be a very significant thrust for FY22.
And so 125cc platform needs more expansion because Pulsar can do limited profiling. You need a different type of a profiling in 125cc to further take your market share up from say 19%, say as high as 35-40%. Is there a thought internally on those lines?
Yeah, of course, because we are very, very encouraged by the response of the customer in expanding this segment. And you are absolutely right that one brand cannot achieve everything, and particularly because, as you know, this brand is being drawn from the sports segment. So we don't want to obviously stretch it too much to cover all types of sub-segments within the 125cc segment. So yes, we are very encouraged that there seems to be a very big potential for driving this growth in this segment. And we are going to be looking at other pockets within the 125cc segment. We are also looking at building the 250cc segment because we feel that it's the quarter liter class is something which the 150cc customer is ready to move to. It will take time, but slowly and steadily we are attacking that as well.
Thank you. Chirag, sorry to interrupt you. I'll request you to come back in the question queue for a follow-up question. Participants are requested to ask one question per participant. The next question is from the line of Amin Hirani from CLSA India. Please go ahead.
Yes, hi. Good afternoon. Thank you for the opportunity. My question was actually on the Chetak. So it was just wanted to understand. You mentioned that the new orders were so high that you had to stop taking the orders. So just want to get a sense in the cities that you are present today, which are, as I understand, 2. What is the kind of demand that you're seeing, and what is the kind of capacity that you have in case over the next 12 to 18 months, as we go into newer cities and as demand goes up? What is the kind of capacity that you have from your end to supply to this demand if the EV scooter market really takes off?
Well, taking the capacity point first, our capacity is really determined by the ability of the vendors, particularly the international vendors, to supply some components. A lot of these are, on the electronic side. So we are not capacity limited in our immediate system, but it is from outside the system, particularly outside the country, that we are facing issues. And more than issues, it's the uncertainty. We can get more. We are not getting the guarantees of continued supply, which is what is the reason why we are not opening the bookings full throttle. On the demand side, in 48 hours we have to close it because we can't supply enough. So we feel that, and this is at a higher level of price. You see, we hardly faced any cancellations in the last 12 months. So I guess the precise answer will be really known when we go full throttle with supply and exhaust what is in the pipeline and make all efforts to seek more and more bookings, which will start to happen from July, August, September, I hope. That's the time when we will see what the limits are. Right now, we are not facing any issues. We are wanting to, pick up our dispatches to 4-figure numbers very quickly in May, June.
Monthly 4-figure digit kind of number.
We want to touch 1,000 unit deliveries immediately.
Okay. That's great. Secondly, just a question on the domestic motorcycle pricing in general. So even before the commodity prices increased, we had seen a significant, price inflation because of BS4 to BS6, and at least initially last year, it seemed that the market was able to absorb it on an incremental basis, and almost all manufacturers passed on, the pricing in a very judicious manner. Leaving the lockdowns aside, is there any sense that you're getting from the ground in terms of how much of a price hike the customers are able to take? And is there a limit in your mind as to where does it become difficult going forward?
Well, I must say that we one of the features of despite COVID, the features of the FY21 outcome is that the BS6 related price increases have been digested. Before COVID and before we entered FY21, there was a concern regarding the thing, but and as I said in my previous comments, we have not seen a wholesale, down trading for the cheapest brand. In fact, I'm not speaking just for Bajaj, but for the industry also. You can see these numbers in the Siam report, etc. The cheapest variants are the ones which are facing the biggest decline, and that is because that section of the customer has got very badly hit. Whereas, the customer above that, in the top half of the demand pyramid, seems to be responding much better and is taking the price increases. Otherwise, there is the most expensive 125cc which is there. Why should that be the fastest growing? Of course, the proposition is strong, but it's coming at a price tag, and the customer has understood it. I feel that the customer is going to seek substantive value. They're not going to pay money for some paint and sticker job, but they want, a substantive value. If the value is there, they will pay the price for it. Is the takeout for us last year.
Thank you. Sorry to interrupt you, Mr. Amin. I'll request you to come back in the question queue. The next question is from the line of Kumar Rakesh from BNP Paribas. Please go ahead.
Hi, thank you for taking my question. My question was more around three-wheelers and especially the electric three-wheelers. So where are we right now on building our own product for that? And what is going to be our strategy in rolling out the three-wheelers? Will it be the way we have done it for two-wheelers, restricted to few cities? Or we go across the countries and start cannibalizing our own product? Yes. So what is going to be our commercial strategy when we eventually start launching our own product?
Well, as I said last time also, the electric three-wheeler is under development. The prototypes are being tested, and we will put these out in the market. We feel that the business case, like for like, is not very supportive of a movement from ICE to electric. If there is regulatory support or if there is a subsidy support, then the matter is different. But like for like, if I was a three-wheeler driver, I would not take the electric at this point of time. But having said that, we don't think that, we think that this equation will change because it depends a lot on how the battery costs move and whether there is some outside support from the government, whether in terms of regulations or creating a protected space for electric. So we are going to calibrate the expansion of our business with how the industry unfolds. Our primary objective is to be in the forefront, absolute forefront of building capability for this business, but our objective is not to go out there and sell an electric three-wheeler at any cost. We want to be the most capable electric three-wheeler and electric two-wheeler manufacturer, and if that requires us to do a certain level of business, because this cannot be just theoretical, we will do it. But we don't see any reason right now, primarily because of the business case, underlying business case, we don't see any reason right now to move the needle artificially from ICE to electric. For example, we see the business case in moving the needle from 100cc to 125cc because we feel that is something superior for the customer and there is some better margin for us. And we will do all in our power to move the needle in that manner. But in electric case, we will calibrate the response to how the market unfolds, whilst investing heavily into building capability and being, ahead of competition in that respect.
So, Rakesh, just for a clarification, so given that some of the unorganized players and smaller players have already created a large electric three-wheeler market, we don't intend to compete with them in that market, and also we don't expect a disruption by those players getting into the market in which we currently are.
So the market that they have created is in the lead acid based battery powered three-wheelers. This is an area after due thought. We have felt that it is not really worth competing in because it's a substandard solution. This solution mushroomed more in response to two things and less driven by technology. And those two things were that there were artificial restrictions placed on IC three-wheelers in terms of permits. So people were not. And second thing is the need for intra-city mobility was exploding. And in this time, these ramshackle contraptions imported from China based on, very, very poor battery technologies have made an appearance and they are ferrying people around. This really is not the kind of solution because, we are not creating good assets over there for the drivers and the users. We evaluated that and we felt that our strategy will be built around the proven and the better lithium-ion type of technologies rather than the cheaper lead-acid ones. We have to just look at what has happened in China to the entire lead-acid based mobility industry and what kind of problems that has created for the country. We don't want to participate in making that happen out here.
Thank you. Sorry to interrupt you, Mr. Rakesh. I'll request you to come back in the question queue. The next question is from the line of Sonal Gupta from UBS. Please go ahead.
Yeah, hi. Thanks for taking my question. Good evening, everyone. So just, Rakesh, to follow up on Chetak, actually just wanted to understand in terms of the pricing strategy, like you mentioned, you've taken a significant increase. I think there was a 15,000 increase, and then there was supposedly, from what I saw in an Auto Car article, there was a 28,000 increase. So, we seem to have had a very attractive price at 1 lakh rupees, and now that has substantially changed. And also in light of, we are seeing some of the newer startups which are looking to come in the market with an aggressive sort of pricing. I just want to understand your strategy in terms of the space, because also on the other side, while you've announced a new plant for advanced manufacturing, including bikes, we're not putting in a dedicated facility for EVs. So, just putting all that in context, wanted to get your sense on how do you approach this pricing for EVs? I understand the volumes are currently very low, and therefore, obviously, it's not profitable. Maybe it's not profitable even at the current price that you're charging. But shouldn't we take a longer term view and see that potentially this market could be 500,000 or 1 million in 5 years, and base our pricing on that basis? I mean, how do you think about it?
Yeah, sure. In fact, that is exactly what we should be doing. We should zoom out and we should take a longer term view and not just take a very short term view. If I today start selling the motorcycles at bicycle prices, the motorcycle market is going to explode. There is no doubt. Nobody will buy a cycle. People will buy a motorcycle, right? But we are not doing that. I think we are not the complete players to decide the destiny of this in the nascent industry. I don't think anyone is. The key thing is that the battery technologies, the battery costs, the cell costs are what is controlling the advancement of the industry. We are wanting to ride that. Now to artificially bolt ourselves onto something which is not in our control and try to do things just to expand the industry is not what we are going to do. We feel that yes, over a period of time, the battery cost will come down and the industry will expand, and we want to ride that wave. But those costs are not in. That is going to be the singular and fundamental driver of this industry. It is not range anxiety. It is not charging ecosystem. If the battery costs come down, the acquisition costs come down. There are enough entrepreneurs in the country and elsewhere to set up charging systems and offer and get consumers rid of this range anxiety. That will happen. We've seen it in PCOs, mobile unit charging. We've seen it in e-rickshaw charging on roadside mechanics. That will occur. The fundamental thing is how the battery costs move. And, we want to wait for that. We want to ride that. And we know that we can't wait for that to occur and then start our business. So therefore, I said, we're going to be very aggressive in terms of capability building, but we're not going to take it on our shoulders as a missionary to go and expand industry irrespective. Let the battery manufacturers and the battery technologies do it.
Right. Sorry. So just on that, given that the government is giving a 10,000 rupees per kilowatt hour subsidy, isn't that substantially reducing the burden of the battery cost?
It is, but despite that, the cost, the architecture is such that despite that, the initial acquisition cost is very high, and it's the same arithmetic for everyone. At our level of players, there is a very, very marginal difference, little difference between what people are experiencing in terms of cost. But the comment I'm making to you is after factoring in the subsidy, and let's also be clear about one thing, that the subsidies may not remain forever. We all know the pressures which the government is under, and the subsidies may not remain forever. So the industry has to be able to deal over a period of time with the removal of subsidies and its impact on cost, price, and therefore consumer demand.
Okay, sure. Thanks a lot, Rakesh. Thank you so much.
Thank you. The next question is from the line of Aditya Jhawar from Investec Capital. Please go ahead.
Good evening. Thanks for the opportunity. Just, some clarification. So, on the OPEX side, if we see on a sequential basis, there has been an increase while the volume has come down on a sequential basis. And typically, discounting, as you also alluded, is relatively lower in Q4 versus Q3.
So, Aditya, in Q3, I earned 73.6 Indian rupees to a dollar, which has come down to 72.9 rupees to a dollar. So, sequentially, the realization has come down.
Okay. Fair enough. Now, just the final question. Some clarification in the comments of our strategy of the economy segment. You mentioned that we are pushing the customer up the value curve. But what we have seen in the last year that since we discontinued some SKUs in the economy segment, we lost some market share. And you also alluded to the fact that the bottom of the pyramid is impacted because of the pandemic. So is there a thought process that, the discontinued SKUs will come back and that will give us more power to get back the market share in the economy segment?
Well, we are going to continue to attack the economy segment based on upgraded products because, this strategy of offering a similar product at a lower price, it doesn't work for us and it doesn't leverage the innate capability which we believe which we possess, which is around our R&D and our ability to turn out innovative or let's say differentiated products which can bring some kind of a proposition to even the economy segment, whether it is in terms of styling, whether it's in terms of comfort, whether it's in terms of safety, etc. So even if when demand comes back, our attempt will be only to offer better products at similar prices.
We have crossed 5 p.m., so we will take the last two questions and then we will wind up.
Thank you. Sir, should we move to the next participant?
Yeah, two more questions and then we will wind up.
Thank you. The next question is from the line of Aditya from HDFC Securities. Please go ahead.
Yeah, hi. The steady set of results in this quarter. I just had a question that we are hearing of a slowdown in tractor sales, and this segment is obviously very linked to rural. So how do you see the recovery in two-wheelers this year in light of, rural last year was a growth driver in that sense?
Actually, rural was a growth driver only in the period, at least that was from our prism. We could see that it was only, I would say, end of June, July, that period which is traditionally when it occurs. Otherwise, the recovery or the rebound which occurred, apart from the metros, it very much was right across the country, I would concede that, Delhi and Mumbai, the super metros, did have a continued run of depressed demand. But otherwise, more or less, in fact, it did well. Towards the end, in fact, I would say that the really agrarian rural towns were not performing well. It was the market towns, the mandis and those areas of rural which were doing well. So even there are nuances. I think given the fact that there is a better monsoon, there is a reasonable monsoon expected, and on the back of hopefully better procurement prices, etc., we will see a repeat of the last year. It should be quite evenly spread out.
Okay. And just another question, on EVs. We've seen the Ather 450X, which is really, if I may use the word, it could be the Pulsar of the EVs. Like you guys came in with the Pulsar way back in 2002, created your nation. That's how our motorcycle story really began. In that sense, the 450X today is the fastest scooter around as compared to in ICE and EV. And, it's really created a certain halo around it. So do you think, we may lose mind share? I understand volumes are not there, but in terms of mind share, right now it's all going to a startup. So how do you see that playing out?
Well, as the industry is very nascent right now for us to start sub-segmenting it and, launching products for sub-segments. But we deliberately took an opposite point of view. We felt that there are enough customers out there who would be attracted to elegance, style, and robustness. That's why an all-steel body and very classic design scooter, because we felt that was closer home to what the consumer was experiencing. But as the industry unfolds and the electric side becomes larger, there is nothing to say that we will not address emerging sub-segments. As you know, that we, on one end, are collaborating very closely with KTM to look at to look at high-performance motorcycles, which can easily be platformed into the scooter space as well. That project is going on. In fact, they're going to take the elements of the Chetak and try to see what they can do with it in Europe. So there is a very good collaboration going on, which addresses one end of the spectrum. You know that we have a alliance, we have an engagement with Yulu, which is into micro-mobility, which is into these sub-25 kilometers per hour speed, very, very light, short distance two-wheelers. That's absolutely the other end of the spectrum. So we are collaborating with them to see how we can manufacture design codes and introduce stuff in that time. So if you see from that end of the spectrum to the most powerful electric bike end of the spectrum, we are trying to have a very broad interface. And as and when it makes business sense and becomes meaningful, we will subsegment the market and we will launch products.
Thank you. Ladies and gentlemen, we'll take the last question from the line of Pramod Kumar from Goldman Sachs. Please go ahead.
Yeah, thanks a lot for the opportunity and congrats on good set of numbers, Rakesh and Soman. My question is on the same lines on I think we've had too many questions on EVs, but Rakesh, just wanted to understand, there is a bit of a concern in the industry community and even analysts that startups like Ola could really end up disrupting the market of traditional volumes in terms of, and the fact that the traditional mainstream OEMs could be lagging behind, especially given the big announcements what they're making on charging infrastructure or capacities. So just want to understand your perspective, because you're already dealing in, you're seeing good response to Chetak, you have global presence, so you're doing both the things at the same time. So wanted to understand how worried one should be from these kind of startups who are threatening to disrupt the space, and whether the mainstream companies are going to be kind of handicapped like what happened in the luxury car market globally on the EV side, or do you see things differently?
Well, Pramod, I don't think that the two-wheeler industry, which is us, and if I may say so, my colleagues in other companies, are going to face a Kodak moment. I think all of us have been educated quite well by the events of the disruptive changes, what's the consequence of disruptive changes and having a myopic view of markets. We have to also thank Mr. Elon Musk and what he has achieved with Tesla opposite the four-wheeler industry, and those case studies are all staring us in our face. I don't think it will be out of myopia that the existing industry will be caught with its pants down. I don't think that is going to occur. I'm sure our competitors also, our established OEs, and certainly us, we are very serious about the advent of the electric business and the way it will transform, whether it is in manufacturing, it is at the dealerships, spare parts, service, how to engage with the customers, what customers will value. All those aspects we are very, very alert to and sensitive to. We have an existing business. There are people who don't have any business. So that's why they have to make dramatic announcements. They have to invest. We don't have to invest because we have the capacities, we have the people, we have the R&D. We started investing in the R&D 5 years back on electric. We can't churn out a Chetak in 2020 within a few months. We've been working on it 3 years prior to that. We have been assembling teams, talking to vendors. So I don't think people will be caught unawares. Everyone has moved past that. Of course, some of the startups are following a different business model. and we will have to wait and see. I would like to say here that we will not follow that business model, which is private equity driven and etc. etc. But I would like to zoom out, and I would like to say that the fate of this whole thing is not going to get decided in 1 quarter, 2 quarters, or 3 quarters. This is a change which will occur over a period of time, and battles will be fought. It is the same thing like in scooter to motorcycles, So we are getting prepared for that. If there is a disruption, if there is a sudden explosion, if somebody wants to seize some eyeballs and all, and in a frantic manner, we will deal with that situation. But we would like to deal with it in a way which is more sustainable. And in the end, we win. In the end, we aspire for leadership. So that is our viewpoint. We are quite aware that there may be a collision in the marketplace of two different business models, ours and the private equity driven. But there are other factors also which will decide, success and failure, and this will have to be viewed over a period of time. But one thing I can tell you, that certainly at Bajaj Auto, we are very clear and keen that we have to have top-end capability.
And Rakesh, just last one. According to you, given the customer's preparedness and the cost curve, the way it is expected to fall, what will be the period where you think we'll see an inflection point on EVs? Right? Is it like FY24, 25? Where do you think is likely inflection point for EVs in India?
It's a very difficult one to answer because a lot of it depends on battery cost. A lot of the battery cost coming down depends on how much of supply is coming on stream. Right now what is happening is not only current demand is outstripping supply, but people are also placing future contracts, large contracts, and I'm talking about four-wheeler manufacturers also, who are placed, and they are slightly ahead on the curve in terms of the industry development of EV in their case. So that is driving the demand side, overall demand side up. Supply it cannot increase linearly, as you know. It happens in steps, and it has been a bit slow in expanding because there are competing technologies. These things require huge investments, and the big technology, battery technology, cell technology guys don't want to be getting caught on the wrong side. Then there are things like hybrids and fuel cells, etc., which are alternate technologies, which is sort of impeding supply coming on stream. Now, this matching of demand and supply has to occur before the costs come down. If I take a poll of polls as to what the consultants are saying, what different stakeholders are saying, it does appear that it may take about 3 years for a point of inflection to be truly reached, where this thing will acquire a very definitive momentum of its own. Till then, it will be more of feel and push, and somebody will just try to do something artificially and push the agenda along. But generally, it is felt between 3 to 5 years is when this is not Bajaj Auto view. Like I said, this is a poll of polls kind of a thing. But generally, people feel that in the motorcycle space or the two-wheeler space, it may take about 3 years for the point of inflection to be reached.
Great, Rakesh. Thanks a ton for the exhaustive response, and wish you all the best, sir, and take care. Thank you.
Thank you.
Thank you very much. Ladies and gentlemen, that will be the last question for today. I will now hand the conference over to Mr. Soumen Ray for closing comments.
Thank you, Soumen here. Thanks a lot, everybody, for dialing in. As I say at the end of every call, Anand and myself, we are available. Sanjeev, we are available for any questions that you may have. But I'd like to sign off with 3-4 things that I would like to leave you with. First, I think what holds Bajaj Auto in great stead is our ability to mitigate our risk through diversification. As you can see, exports is coming to the party, In spite of all these pressures in domestic, we are still rock solid because of our mix of almost half coming from exports, and that also across multiple countries. I mean, in a year like that, like what has gone by, in Latin America, we actually sold more two-wheelers than we did in the previous year. So that, I think, is a very important message. The next message I would like to reiterate is the dividend. We came up with a policy of 90% if we have, up to 90% if we have more than 15,000 crores. We had about 17,500 crores. We've announced almost 90% dividend at 140 rupees a share. So that is how we would like to, reward our shareholders. And this has been a concern, a question which we have often faced, and now we have replied it. The last bit is around margin, and I would like you to consider the facts. There is a rod debt which, as Rakesh explained, is going to come. When and in what shape or form we do not know, but that will be a clear bolt-on. Forex rupee is a depreciating asset. We have baked in the costs, but obviously the forex depreciation will help us deliver. Just to give you a sense, last year to this year, forex alone has added about 450 crores to the kitty between FY21 and FY20. So that's a big plate. Commercial vehicles would improve, and that mix will improve, which will give us further headwind. So with this, we do have a tailwind. We do have a headwind, which is around that the cost increase in Q1 continues, which will be a dampener in Q1. But in near future, I see our margins stabilize. And in all of this, one must remember that it is very difficult when you are sitting at 18% to manage headwinds. It's much easier to manage headwinds when you are at a lower number. So we have really stretched all our leverages, our procurement, our cost optimization, and that is how, in spite of lower volumes, we have delivered a margin which is higher than last year. We continue to focus on margin, but yes, in the near term, there could be some headwinds. But as I said, between forex, rod debt, and CD volumes increasing, we should be directionally moving our margin upwards. With that, I wish all of you to be safe, and thanks a lot for dialing the call.